All right, we are live today with Global Empowerment Team. We are back at you, and with another special guest who's been here before. However, we had to have her back, and we want to thank her right now for making the time to come back. But before we get to that, I just want to thank you all for making the time to watch the show. Once again, this is the Global Empowerment Team. I'm Benny Bell with Surpass Estate Group, as well as the Global Empowerment Team. And I'm going to be introducing my co-host, my counterpart, my business partner, my good friend, Khalil Macklin. How are you today, sir?
I'm doing well, man. Happy belated Thanksgiving, not only to you, but our audience, our guest, Lynell, as well. I'm doing good. It's funny, though, because half of my garden doesn't know what it wants to do because we almost in December. I think we may have had 1 or 2 days of rain, and it's
Mm,
always sunny. But it's confusing because you go outside thinking it's sunny, but it's kind of nipply outside. It's kind of cold, you know what I mean?
right,
But
right.
I got okra still growing. I got some tomatoes still trying to push a couple of things out. I got some basil still doing its thing. So I'm enjoying the fact that almost in December, I'm still being fruitful, you could say. But anybody who says global warming isn't real, go pay attention to what's going on in our society, our world. You're going to realize global warming is a real thing. So I guess I'm taking advantage of the global warming today, man. How you doing?
Man, just look in your own backyard, right? Yeah, it's the same thing going on right now. I was actually outside a little bit today too, and I had a chance to kind of look over my garden. I'm like, yeah, I'm kind of like, wait a minute, this is my first year doing it, and since I was a kid with my grandma, so like I know like tomatoes shouldn't be right still growing this late in season, right? It should be a kind of a cap like so when it starts getting cold.
Yep.
Okay, okay. So yeah, so I've been feeling that as well, but man, hey, I'm still picking them and eating them. So it's, like you said, we're still reaping the benefits of it. So yeah, so today we want to talk about. So it's been some recent changes with what's going on in the real estate realm, and so like we always do, we always want to provide value and keep you abreast as to what's going on that's going to affect you economically, affect our communities, and so this is something that's actually in the positive side of it. This is kind of an upswing for us in the residential world. So we had to get Lynell Bevels of Mason-McDuffie on here today to talk about how what the recent changes are, how it affects our buyers, and what the loan world looks like coming up. So how are you today, Lynell?
I'm great. I'm great on this day after Thanksgiving.
Nice.
I'm not comatose.
Right.
I didn't eat enough turkey.
That tryptophan
So
not working yet, huh?
yeah. I'm good. I'm good. I'm glad to be here. It's good to see you both, and I appreciate the invitation as always to come and talk about what's going on in the market.
Yes.
Lots is happening. I mean, rates are still fantastic. We're still at historically low rates, and I think that that's probably the biggest win, if you will, in reference to the increased loan limits. So,
Well, I'm excited to learn as someone from the outside looking in who's not in mortgages or real estate or whatever it is. I'm excited to learn just like the rest of our audience. But I will
awesome.
say this really quickly. We're still giving thanks today. Although we celebrate Thanksgiving on a certain day, every day is a day that you want to give thanks to the creator of everything that we have to celebrate, the abundance of life, for friends, for fellowship, for family, for health, for longevity, for struggles, for lessons, because we don't take losses, we take lessons. We still want to give thanks today, although it's not officially Thanksgiving anymore. We still want to continue to give thanks, as well as, before we continue to go on, anybody watching at this point, go down and hit the like button, hit the thumbs up button, hit the heart button, hit the subscribe button. Go to Lynell's page, do the same thing. Go to Benny's personal page, go to my personal page, do the same thing, because this is the way we continue to bring the content, is with the engagement with our audience and with our network. So if you're looking for different types of topics, more of the same type of topics, please reach out to us, let us know. But I'm going to sit back like a fly on a wall and be educated by this conversation moving forward, because I'm excited to talk about what we're talking about today. So Benny, Lynell, let's have this great conversation.
Right on. Right on. Um, so, Benny, specifically, what did you want me to cover? What would you like me to cover?
So I'm sure just like anyone else who's kind of tapped into the real estate industry at all. And Khalil, I mean, obviously, with you giving your statement just now that you're not in this at all. No, it's great insight because, we have clients that are first time home buyers to clients that are buying multi-million-dollar homes. So, it doesn't, you don't have to be in one particular niche to,
Sure.
understand real estate at all. However, the recent changes are obviously going to affect those that are buying under $1 million homes,
Yeah.
more than people that are buying multi-million-dollar homes right now. Well, actually, what's recently taken place in their industry is not going to affect them at all. With our topic today. So what we want to talk about today, obviously, is the recent increase in the loan limits.
Right.
What that looks like for counties that are in higher price brackets, such as the one that we were in, Alameda County, Solano County, Napa County, San Francisco. So these areas where raising the loan limit to what it is now it gives the opportunity for a lot more buyers to kind of put their foot in the door in those areas.
Absolutely. And if I can share my screen,
Definitely.
I think I can share my screen here. Let me just hit share, and I will find these links. It's so interesting. So currently, until December 31st, 2020, the conforming loan limit is $510,400. And so you can see this grid basically shows you all the counties all over, right? It's and all the states. It has all the different counties. And here's California. So today we're still at the 510,400. And what that means is the conforming loan limit is what you hear most about when you hear, updates about interest rates. Those interest rates are typically tied to the conforming loan limit. And with that being the case, Fannie Mae and Freddie Mac, which are the two larger investors in that space, they will only insure loans made up to those loan limits, the 510,400. Well, what they've done is increase that loan limit from 510,400 to now $548,250, which is a really dramatic increase. I mean, it's pretty dramatic. And so what that means is instead of you capping out, let's say if you were as a first-time home buyer coming in with a 5% down, normally with the max loan amount of 510,400, your max purchase price would be $537,263. So, $537,263, it's not that it can't get you something, right? But, with the way that prices are going up across all counties, right? Solano, Alameda, Contra Costa, this increase in loan limit is going to really have a fantastic, impact on those first-time home buyers, right? Because now they can kind of move into a little bit higher purchase price. And so with that same example, if the loan limit has increased to $548,250, which is effective January 1st of 2021, you take that same $548,250 and you divide it into 95%. And I'm using 95%, but we could be using, a 3.5% down. I'm just using 95% as an example. You divide it by 95%, and now instead of 537 being your maximum purchase price with a 5% down, now you're at 577. $577,000, 5% down keeps you in that conforming loan limit space, which is the friendly space, right? Because you have friendly interest rates, which are, hovering in the low threes. You also have friendlier underwriting guidelines. Those are the guidelines by which we make our loans, right? So all lenders, banks and such make loans within the conforming loan limit space based on Fannie Mae and Freddie Mac's guidelines. Some lenders have overlays, if you will. So let's say Fannie Mae and Freddie Mac says, well, we'll insure that loan as long as your borrower has, 2 months reserves and a 660 credit score. Well, some lenders might say, yeah, okay, Freddie Mac, that's cool, but we're going to add an additional layer to that. So we want our clients to have a 680 credit score, and we want them to have 4 months reserves. And guess what? That happened during COVID, right, Benny? In the
Yeah.
middle of a deal, you know, things change, and it's because of, you know, the inherent risk that, you know, we were looking at the height of COVID, right, where you had a lot of people who were getting laid off. And so, of course, a lot of the lenders and banks and such got a little concerned and wanted to make sure that those same first-time home buyers who had to adhere to the standard Fannie Mae and Freddie Mac guidelines of 2 months reserves, right? We now wanted them to have 4 months reserves. And so, you know, I say anytime you get into a transaction, you kind of sort of want to confirm what those guidelines are, and if there have been any recent changes, because as we learned in the height of COVID, a lot changed for, you know, your standard first-time home buyers. But today is a good day because with loan limits at 548,250 effective January 1st, this just gives buyers, first-time home buyers specifically, more opportunity. I think it gives them more opportunity. What are your thoughts about that, Benny?
Yeah, you know what? I'm glad you brought that point up, because especially with the low inventory that we're experiencing right now and how competitive the market is and how competitive our buyers, especially the buyers that are right on that cusp, right, you know, right real close to that loan limit. Now this gives them more opportunity to be a little bit more competitive in their offers. They could be a little bit more strategic. They could offer more money. So now that gives them a you know, better chance of being at the table.
Absolutely. I mean, and you know, to take it further, I have a client right now who is she's already in contract on a property in a new construction development out in Sacramento. And if she waits until January 1st to close her deal, it's going to be a better situation for her, because right now we're looking at a down payment assistance product offered through the California Housing Insurance Fund, or CalHAFA, for those of you who know the acronym. For CalHAFA, their product is set up for people who are buying in the conforming loan limit space, as well as the high balance loan limit space. However, if you go over conforming and into high balance, it costs you more money up front. There's a fee, if you will, there's a premium for exceeding the conforming loan limit. And so she's literally $3,000 over 2020's conforming loan limit. And so we were spending, or I was spending quite an amount of time trying to figure out how I was going to make this work for her. And I just said, okay, you just have to come up with the additional $3,000, you know, and as a first-time home buyer, you know, you've got all these, you got your down payment to consider, you have to pay the closing cost, you have to set up your tax and insurance impound. And those are the things that kind of increase the cash out of your pocket. Well, once we got this announcement, I just thought, well, wait a minute, the builder might just want to wait, you know, take a step back and wait, you know, like a week, just so that this borrower can take advantage of, you know, instead of the 510 limitation, we could move up to the 548, which would save her money up front. So I'm really excited about it, because, you know, it's going to help one of my active buyers, you know, like immediately be able to save money out of pocket and also save on her interest rate, because the difference between a conforming loan limit interest rate and a high balance interest rate can sometimes, depending on the day, can be anywhere from a quarter to a half a point, you know, because a lot of these things are determined by credit score and loan amount. And so I'm just really excited that there's been such an aggressive increase, if you will. And it makes sense, because particularly here in the Bay Area, housing prices are kind of up there.
Yeah, and they're continually rising.
Yeah.
And that's a great story, because I mean that's very impactful in the fact that it's only a $3,000 difference.
$3,000.
And we're talking about a brand new build. The builder wasn't going to give up that $3,000, right?
Nope.
So, I mean, this is a huge situation, especially with the rising costs here in California. And so, you know, with you bringing up the point about the high balance. So, in your chart here, you know, certain counties, the chart previous to this. So certain counties. So obviously we're talking about, you know, certain counties at the 510. You know, in more higher cost areas like Solano County, San Francisco, you see 765. Right.
So that's the high balance. And so right now, the conforming loan limit for most of the Bay Area counties is the 510,400, $510,400. However, in the Bay Area, we have high cost areas, and those high cost areas have a high balance loan limit associated with them. And so currently the high balance loan limit is 765,600 for 1 to 4 family. That is going to increase also January 1st. So here, where we talk about the 510 for the standard conforming loan limit, we'll be able to move up to the $822,365,000 for high balance, which is also a big win, because again, if you're at the 765, we'll just do another example, 765,600. We're going to take that same number, we're going to divide it by 95%. That would be a purchase price of 805,894 if you were coming in with 5%. Okay. Effective January 1st, you now have an opportunity, and I'm speculating that the guidelines are going to remain the same in the sense that with high balance, you do have the option to put 5% down. That's what it is now. I imagine it's going to remain the same. So we're going to take this $822,375,000 loan amount, which will be the new high balance loan limit for high cost areas only. So most Bay Area counties, you'll divide that by 95%. And so now you're looking at an $865,000 purchase price with the ability to put 5% down. I mean, that's gangster right there.
That's huge.
Like real 865, you can come in with 5% down. And so it's a huge opportunity for first-time homebuyers, because we know that here in the Bay Area, our first-time homebuyers, there's a range, right? You know, some of them are, going to be buying up to the 510. Some are going to be, looking at 850, 860. And this just creates more opportunity, particularly for, I'm thinking about like the millennials, right? Who are making more money, right, per year than we were back then at their age, right? Just because things have just changed dramatically. And so they're more or less in those higher price points, those higher, conforming and high balance price points. And so this is perfect. This is perfect for, the millennials who are finally going to get out their mama's house and buy one. Whether they live there or not, we hope they plan to live there, because these particular products are specifically for owner occupied. Right. Anything, if you're looking to purchase investment property, there's always higher down payment requirements. But, the point is that this is an opportunity for everyone, right? Who's looking to purchase, in 2021, that you'll have better, higher loan limit available to you. And also you'll be able to take advantage of those lower interest rates.
Right. And it's still a great tool for someone who is interested in investing, because
totally,
this is for 1 to 4 unit properties.
Yep.
So you can get a 4 unit, live in one, because you still have to have that as your primary residence. So live in 1 unit and rent the other 3 out.
Yep.
And basically you have your mortgage being paid and you're staying free.
Absolutely. Benny, I think you and I were talking the other day about another realtor's client who's using that NACA program.
Right.
And, and even though that program is not something that I have the ability to originate, I'm not going to block anyone's blessing. I think it's a fantastic, opportunity. I hear that the program is a little more robust and organized than perhaps it was in the past. And so maybe there's an opportunity to check it out. But with these types of loan limit increases, I'm sure it's going to make that program, that NACA program, even a better opportunity, right? Because their loan limits increase like everybody else's. And, to your point, buying, units, the duplex, triplex, or fourplex, you've got someone paying their rent that's going to cover your mortgage as well. I mean, it's fantastic. It's just
definitely.
Yeah.
That's the for me, as once again from the outside looking in, as someone who does want to be more involved in real estate. That's for me. I tell people all the time, like, especially if you're a smaller family, I got 3 kids, so it's probably not feasible for me to move in a fourplex and think me and my 3 kids can live in a 2-bedroom or something like that. So it may not be the best option for me. But if you're a smaller family, maybe you don't have a family at all. Maybe you're somebody who's looking to get involved in real estate, use it as an investment tool. But these are the workarounds. You live in one, You have the other three to where people are paying your mortgage. Because I know some people, they look at, man, I got an $855,000 loan. How am I going to pay it off in 20, 30 years? My mortgage payments are going to be out this world. But this is a way to still be actively involved and share the burden of that mortgage, because people are always going to be looking for homes. And this is a way for you to get actively involved, become a homeowner. Like you say, get some assistance on that mortgage, because now you're renting those other three out. Most likely they're paying the entire mortgage. And it's just great ways for us to be involved in real estate. So I'm glad you mentioned that, because that's a great takeaway for anybody listening. Is the dream home may be 2 or 3 purchases away.
That's right.
I don't have to buy the dream home with my first purchase, but just to get my feet wet. Like right now, I got my 16-year-old daughter. She's paying the garbage bill, which is $55 every 2 months. It's not because I need her to pay the garbage bill. It's because I'm acclimating her to what paying bills looks like. For when she goes on her own, and now she's paying bigger bills, it's the same process as it is with the smaller bill. So sometimes the large home that I'm looking to raise my family into retiring, that's 10, 15 years away. But there's still moves I can make in real estate up until that point that can get me acclimated, accustomed to being a real estate owner. And to know that there's programs out here that allow me to, like you said, get approved for 822, but with the 95% and putting 5% down, I actually now have increased what I'm approved for. To know these programs are out there, making it much more feasible to be a homeowner. This is a great conversation. But I just wanted to interject that takeaway, because I think that's big for a lot of us trying to get in real estate.
Yeah. I mean, your point is well taken. I mean, it doesn't have to be, your forever home. For a lot of the people that I've worked with in my career, quite frankly, which is like 30 some odd years, honestly, most of the people that I've worked with have been first-time home buyers, and the homes were not their forever homes, right? Certainly some of them maybe have still continue to live there, but most people, it's like a stepping stone, right? They're going to buy this one property to get them to the next property, and so on and so on. And certainly units allow that, because the other kind of win with these 1 to 4 family purchases is that the Federal Housing Administration offers a purchase opportunity where you can put 3.5% down, versus with conventional lending. If you're buying a duplex, a triplex, or a fourplex, even if you're going to live in it, there is not a 5% down opportunity. So a lot of times people who are looking to buy units to live in, they typically will use the FHA product, because it allows you to put 3.5% down, provided you plan to live in one of the units. And so, I have a client right now who's been looking at units, and it's tough here, at least here in Alameda County and Oakland. It's a tough competitive market for units, because not only are you competing with people who intend to live there, right, homeowners, but you're also competing with investors. I think that's probably the reason why it's so competitive if you're trying to buy, a 2 to 4 family.
Especially in Alameda County.
Yeah. But it's, it can be done, as Benny and I talked earlier in the week. I have a realtor friend who got her client into a duplex in Oakland, which my mind is still blown that he made this work. But what it came down to is, the homeowner making a choice that she wanted to see, this young single African-American woman, she wanted to see her become a homeowner, and she supported that without the fear of worrying that she wasn't putting a whole lot of money down, right? Because when you think about the offers that are made on properties for sale, let's say you get 5 offers, maybe 10 offers, but let's say you get 5 offers. And it's a natural thing to look at the offers and say, okay, which one is the most? Who's offering me the most money? And deciding that you're going to go, with the most money. Or sometimes you go, for the better terms. This person's putting 20% down versus this person's only putting 3.5% down. And so sometimes our first-time home buyers who don't have a whole lot of cash, right? Sometimes they get left, behind. And it really does take, a full team, right? It takes a team of, knowledgeable loan professionals, knowledgeable, compassionate real estate agents, because at the end of the day, the real estate agents are the ones that are kind of navigating this whole situation, right? They're the ones that are in communication with the sellers on behalf of their buyers or these buyers. And so, if we all kind of show a little more compassion for what buyers are going through in the market that we're in, maybe more of our first-time home buyers will get in. And I'm not saying that investors don't deserve to buy, they do. But a lot of times they are literally standing in the way of first-time home buyers who want to live in a property and raise their family and all those types of things. So I'm for the first-time home buyer moving into their house. That I'm not against the investor, but I really, really want to see it where, families, single women, single men, whatever the case may be, can get into properties and it not be as competitive as it has been with respect to investors.
Yeah, it's funny. I've seen it from both worlds, because when I first got into real estate, I primarily worked with investors.
Mm-hmm.
And so that was my mindset, obviously, with around real estate. And I mean, I grew up, my mom, she's owned multiple homes. She rented some homes out. So understanding the benefit of real estate, was one of my first draws to, real estate. My uncle, he was, one of my hugest decisions. Well, I mean, he was probably primarily the biggest factor of why I got into real estate. He was the first person I know that had over $1 million, and he got it as in real estate, investing in real estate. Was a realtor. He had a full-time job. However, he did majority of his his wealth building in real estate. So and he had those conversations with me when I was younger. So that's what gravitated me towards, obviously, utilizing this tool to get me where I want to get to financially.
Mm-hmm.
So understanding that mindset of an investor, I totally get it. I totally get that. It's as an investor, you're looking for the best deal. You're not gonna be that highest offer normally unless it just makes sense monetarily.
Right.
And it depends on the investor. So it's kind of a sticky situation as a realtor to lobby for your client, because one, you're lobbying for your client, however you have to do it legally, right?
Oh,
So for
absolutely.
instance, and I'm not saying nothing was done legally, as far as like before with letters, like letters of about the particular buyer.
Right.
Now that's been utilized in the industry. However, it's kind of shunned upon now, because um, it's looked
Really?
at now because it could be a case. Basically it could be a case pulled up against being discriminatory.
A case from
Uh,
that if, okay, got it.
so yeah. So in being that, obviously we're in California, it's illegal. It's a law happy state, and and if this information could get out that this decision was made by a letter, and what was the decision made by? Was it because they was an African American or Caucasian or whatever that particular race may be, or whatever that family dynamics was? So actually, so I've heard from a number of different brokerages and brokers that they don't allow that letter any longer. Car
Interesting.
doesn't allow the letter. So yeah, so it's we do have that conversation. We do speak out, speak for our buyers in the sense that, it's going through most likely the other realtor, right?
Mm-hmm.
So whatever information that we share with that realtor, we hope that realtor, portrays that information to the seller.
Right.
So yeah, so that's about the extent that we could do as far as, having some type of influence
Mm-hmm.
on the seller,
Right.
right?
And I guess my point is that, I mean, because letters have been around since time was time. My grandfather was
Yes.
a real estate professional for 30 some odd years. He was a life insurance agent for a long time. And both he and my grandmother bought a bunch of real estate, so I've been like you too. I've been around, the whole real estate game for a very long time. And even when my grandfather was in the business, um, people would write letters, but they were general letters, like, I'm a mama bear and a papa bear with these two babies. You know what I
Right,
mean?
right,
I'm
right,
trying to, I'm trying to, buy a house so that I could create some stability for, my family. I mean, it doesn't have to be anything more than that.
right.
But I understand your point. I certainly was not aware of that, but, I think that all of the first-time home buyers out there, right? Even second-time home buyers, right? Because you've got other programs like the Golden State Finance Authority, their program, you don't necessarily have to be a first-time home buyer, right? So it's not just about a first-time home buyer. It's about creating home ownership opportunities for people here in California, other places as well, but specifically here in California, because this is where I am. We all need to do what we can to create those opportunities, right? And to share
Definitely.
with, those who are interested, to share with them how they might be able to get themselves into a piece of property. You have some people who are investors by accident, right? They didn't intend to create a real estate dynasty, right? They bought a property and, I don't know, 10
Escrow
years
shot
later,
up over the
saying,
time.
I
Yeah,
mean,
exactly.
yeah,
Yeah.
some people don't even know that they are going to grow a real estate dynasty, right? Some people are literally just trying to buy so that they can, you got to live somewhere. You have some people who, if they buy, a duplex or a triplex or a fourplex, it's the only opportunity that's going to allow them to buy because they can utilize those rents to help them qualify, right? With single family or a condo or a townhouse, that is not an option. The income that you use to qualify is your work income or your self-employed income. However, when you're buying units, you get to use a percentage of those rents to help you qualify. So that's also, that's a draw for some people.
That's a
And for
huge factor right there. And
it's
I'm sure a lot of
huge.
buyers don't even know that that's an option for them.
Yeah, yeah, yeah. Well, and some people are doing it because they don't have other choice, right? They can't buy. You could go from, let's say, a $200,000 loan qualification up to 400 or 500,000 if you have rents to use to help you qualify, right? So it's a big factor, but it's still, as we talked about just a few minutes ago, it's very competitive in that space. It's competitive in all of the spaces, but definitely when it comes to units, it's very competitive.
Very true. Very true. Well, great. So other than, I just want to make sure that we kind of talked about what that dynamics looks like for all the buyers that are involved. And if, Lynell, we've had her on here a number of times, and I continue to reach out to Lynell. She's one of our teams for lenders, and I mean, she's great. She knows the business. Obviously, if you're looking at this video, you could tell that, she doesn't just toot her own horn about her being in the business for a number of years. She actually knows the business, and she will work hard for you to get the deal done. I am definitely a witness to that. She's worked with a number of my clients, and I continually to reach out to her because for one, she drops boulders. She provides a lot of information and a lot of valuable information. So Lynell, I definitely wanted to thank you again for making the time to be on the show today.
Absolutely.
Yes.
It's my pleasure, Benny. I'm always glad to be here. And, this is information that we all need to have,
Exactly.
so that we can make informed decisions, right? To buy or not. Buying is not for everyone, and that's okay. But for those people who do want to purchase, we want to make sure that we give them the information they need to make that informed decision.
Definitely.
And not a lot of people know some of the, like Benny said, you drop boulders. Both you guys do when it comes to this particular industry. But to know that I didn't know up until recently when Benny and I had a conversation that you can parlay the other rents in a 3-place, 4-place, whatever it is, to offset the lack of down payment that you may have because of that being income. You can utilize it as income. I think that the more we bring these type of conversations, the more accessible and tangible people will know some of these things are. I know, okay, I don't have to have an 800 credit score. Maybe 650 actually qualifies me for a certain type of loan. Maybe I don't have to have, as you mentioned, 20, 30%. Maybe I qualify for 3.5% to come to put down the home. There's so many different ways to access the realization of becoming a homeowner. You know what I mean?
Oh, yeah.
And you start talking to you guys start telling them about owning the land and building the home. It's processes, like it's stepping stones. You know what I mean?
Right.
And as you said, after a while, you end up owning property, land, investment property, all these different things that started from one conversation. So I think the takeaway and the point is reach out to somebody. We all know a real estate agent. If you don't, you got Benny Bell right here. We all know a loan officer, somebody involved in mortgage. If not, you got Lynell right here. But it's important that, as we always say, you make yourself vulnerable, you humble yourself, you reach out to somebody and say, you know what, I don't know it all. You're an expert in this field. How can you help me achieve these goals and dreams that I have? So this is just another great conversation to add to your blueprint of success. So please, once again, go check out Lynell, hit her thumbs up, send her a DM, let her know you want to talk to her. Reach out to Benny, send him a PM, whatever you want to call him. Just let him know you want some information. Whatever you got to do, go to our pages, hit the thumbs up, hit the subscribe. If you want a certain amount of content, let Benny and myself know. This coming Wednesday, I believe Lynell is on the Close the Deal show. I'm not sure if it's the 11 or 12:30 episode. It's the 11 o'clock show. So please type in Close the Deal. Check out what my man Terrence McCray is doing as far as bringing different business owners in one platform to not only network with each other, but to then further network with our community. So we're bringing this information at you. We're going to continue to do so. I hope you all had a wonderful Thanksgiving. I hope you continue to have a blessed and wonderful Thanksgiving weekend. And Benny, you my man. I love you. Lynell, thank you for coming on the show.
Absolutely.
Dropping some boulders. I know we'll see you on the show soon again.
Absolutely.
And real quick, Lynell, let all of our audience know how they can reach out to you. How can they get in contact with you?
Oh, well, I'm on all of the social media platforms. Lynell Bevels at Mason-McDuffie Mortgage Corporation, but I'm on Facebook, so at Lynell Bevels, you can find me. I don't think I compete with anyone. I'm the only Lynell Bevels out there.
Very unique name, yes. So you can either type her in and Google. It's going to pop up on first page. She's the first pager.
I love it.
Go ahead and reach out to her. And like Khalil said, make sure that you guys continue to follow us. Give us some comments. We're on all the platforms as well, Global Empowerment Team. And just give us some comments. Let us know, what other information you would like to see on the show. So thank you all again. I hope you all had a blessed and safe holiday Thanksgiving, and enjoy that turkey and turkey sandwiches and turkey casseroles today and the rest of the weekend. Be safe, everybody.
Yes, thanks.
Take care. Oh, there we go. Thanks, Benny.
No problem. I was like, get my page back.
Look, I didn't know that I came up first on Google. I'm going to Google myself.
Yeah, do it.